Good evening, guys. JR with Secure Metals Exchange. We're going to do another video here, both gold and silver. I'll also show you a little video here that's going viral. A pretty interesting video. But at any rate, let's get right to the point here. We're going to do some trend lines from the previous low here back in May 16th. It looks like we're trading in a currently trading in a triangle. The way it looks like, it does look like there was a little bit of indecision here on Friday. This is a daily chart, so every candle you see here represents one day. Okay, so back on Friday we did have some indecision. Currently it is Sunday, 7:31 p.m. Eastern Standard Time. On Thursday there was a big sell-off following Wednesday when they announced not quantitative easing, but an extension of Operation Twist. Now, Operation Twist is basically just replacing short-term bonds with longer-term debt. The way they do this is by putting us in the hole another $260 billion roughly. And hopefully what that does is it encourages more borrowing, and it brings the cost of money lower. So interest rates are already at zero, and they're trying to bring the cost of borrowing even lower because we cannot get an expansion of markets. So as of right now, the economic data has been slowly moving in the right direction. The last couple months, I think you've seen a turnaround in economic data. And what you're seeing is unemployment starting to rise again, and you're seeing bad unemployment claims. Just everything, really, all the data came out this month was probably negative. So at this point, stochastics are getting to the oversold area. They are still pointing down, so there is a good chance that we might see 1550 overnight trading, or maybe even tomorrow morning. As of right now, these are your key levels, roughly 1550. Your next level is roughly 1534. Your final level would be 1527. Lower than that would most likely have to be this trend line here, extending from September 26th of 2011. Chances are we're going to hit this level here if none of these hold, and we're most likely going to hold around 1503, 1500. Okay, so what I would expect is a move down here, maybe come back up here to 1570 before it continues to go down further. But we'll see what happens overnight trading. Now, this channel here, if we manage to stay above this level, there is a good chance that the buyers will come in and start taking this back up here to this level, because this is, as of right now, this is the channel that we're trading. Okay, this is the channel. So no matter where it goes, until it falls below this number here, this channel here, we're still trading inside this channel here. Okay, so we'll see what happens in the next coming sessions. As far as silver goes, silver has breached the previous low at around 2677. The low is actually 2677. Yeah, we might have a bit of a divergence, but we'll see what happens. Currently, silver trading at 2670, and this would be the line that we're looking to hold support if this level of support does not hold, which at this point it doesn't really look like it is going to hold. So I think 2620, 2624, 2630 price tags, I think at this point it's really inevitable, but who knows? And that's why you have to be very careful with the silver market. If we fall below 2660, there is a good chance that we will see these levels around here, the 2624. On the daily chart, stochastics are getting a bit oversold, so chances are if it hits this level, it should act as a good support. Might want to have, if you're going to go in and buy, you might want to have some stops around this area here, give it enough plenty of breathing room, and then possibly take it back up to here, 27.50. Okay, I'd like to see $28 here for us to start getting bullish, but as of right now, we are trading in a downward channel here. Okay, so I guess within the next couple sessions, we're going to see how what happens with trading. Now, I wanted to show you guys this video, very interesting video. basically CNBC putting a panel together, and everyone just really acknowledging that we are all slaves to the Federal Reserve. And you have to remember the Federal Reserve really cares for itself, and it cares for its powers, and what it wants to continue to do is it wants to continue to have power over monetary supply, monetary control, I should say. So I wanted to show you guys this video, and you guys can comment on it.
So mostly what they do is hold summits?
I think that right now the question is, do we all work for central bankers? That's what I want to address to our guest tonight. Is this global governance at last? Is it one world, the central bankers in charge? Jim Iorio, you say we've got some downside here, a correction in the markets. Fine. But aren't we all just living and dying for what the central banks do? Aren't we all just counting on the fact that there's a Bernanke put and that we won't go any lower than, say, 5% down from here?
Of course we are, because if we look at the economic data, there's nothing to get excited about in that. So yesterday we saw some reluctance for the Bernanke Fed to expand their balance sheets and pump more money in. But the stock market knows that reluctance is totally different than not willing to do it at all. And that's why we saw oil implode and gold trade off heavily, because they're not a protected class. If the stock market starts trading off in the 10 to 15 to 20% area, the chairman's going to come in and throw some stimulus at it. So to answer your question, we are absolutely slaves to central banks, because and we'd love to be slaves of the economy, but the economic numbers continue to do nothing but trend lower.
Mr. LeCamp, do we work for the central bankers?
We know that.
Mr. LeCamp,
we do. This is free. We do. Look, markets are driven by policy now. They're not driven by market forces. They're driven by fiscal cliffs. They're driven by central bank proclamations. They're driven by false rumors coming out of the ECB.
Fiat currency that's continually watered down. They continue to water our currency down so the markets go up and we feel good about it.
Yeah, and listen to what the Fed did this weekend. I think they really screwed up here. They said that we're going to do this Operation Twist through the end of the year. In other words, they're going to create uncertainty about what happens after Operation Twist, right at the same time that the fiscal cliff kicks in. Do we really want all that uncertainty?
Jim, but we have to give the Fed a break here, because the Fed realizes that what they're doing is probably going to have very little economic effect. The only real thing that can help is fiscal and policy changes. So the Fed, all they have is rocks and stones left. They're just going to throw them. They know that they're probably not going to do any good as well.
Gentlemen, Jim and Jim.
Isn't that why we know that there's going to be QE3? Isn't that why we know there ultimately will be QE3?
That's what I'm banking on.
I love what you said there, Jim LeCamp, about the idea that
ultimately there will be.
Jim LeCamp, which Jim? I'm not sure which one said this, but that we're basically beholden to what the central bankers and policymakers do, rather than to the fundamentals in the economy, because we have not been able to generate real growth without doing one of two things. That is debasing the currency or borrowing our way to a false prosperity. Jim Iorio, how do you invest under those circumstances?
What's the question there, Ty?
How do you invest under those circumstances?
We invest because remember that every central bank in the world, not just us, ultimately has to devalue their currency. So you can't keep, you got to put your money in stuff. Big cap U.S. with good balance sheets, to me, is the world's tallest midget.
Mr. LeCamp, every major country holds gold. That tells me that it's attractive. Is it attractive to you with a watered-down currency?
I think it's very attractive, both as a currency and a store of value. I agree with Jim. Ultimately, you're going to want resources, but volatility is going to stay with us. So I think investors need to get used to trimming what they don't like and having their portfolio on rallies, and nibbling at what they do like on sell-offs, because these aren't going away. The only good news here is that free markets will fight back. When we see bond riots in Spain and bond riots in Italy, those are free market forces fighting back, and ultimately they'll win because investors ultimately will walk away.
I think I heard him say he likes gold.
He did say that.
Yes,
I do.
Jim, the two Jims, thank you very much. And John, interesting, I was at a conference this week, and one of the most persuasive investors I talked to there said that he felt that what you have to do right now is buy things that are scarce. He said gold was scarce. Aggregates are scarce.
Yeah, guys, so as you can see, there's just a lot of uncertainty out there in this market. Obviously, uncertainty is not going to go away. Bernanke continues to dangle the little QE3 carrot in front of us, but he does not do anything about it. And, you know, this is the reason why we buy gold. This is the reason why we invest in precious metals, because of all the uncertainty. Again, I will stick to what I've always said. In order for us to see prices continuing to decline, especially on the commodities end, we have to see the market as a whole continuing to decline. If I look at the Dow right now, I think, let me look up the Dow and see how the Dow Jones is looking. Okay, the Dow Jones also looking very negative. I'm looking at this daily chart right here. We hit 61% Fibonacci, just shy of 61% Fibonacci, 12,900, and a big fall off after the Bernanke speech. Okay, stochastics are still very, very high up here, so there is a chance to continuing to go down further. That would probably signal 12,000, maybe even the low 12,000s, and possibly testing these levels again here. So again, if we are going to see $1,500 prices on gold, and we're going to see under $26 on silver, most likely the Dow is going to have to continue. Again, they don't care about gold and silver. All they care about is devaluing their dollar. As precious metals decline, that basically means your dollar is getting stronger. So again, deflation is a big enemy of the Federal Reserve, and they do not like that. So I think the next 3 to 4, 5, 6 months will be very, very interesting. And I guess it's up to us to just keep a close eye on the market, make educated decisions, and again, not get too aggressive here. Because again, especially with election times, this is not the time to get too aggressive here. But again, good opportunities to buy precious metals here on a longer term basis. Again, realizing that all these economic uncertainty, and it's just going to bring more quantitative easing. And you know, what we need to do is we need to stop spending instead of borrowing. We've basically gone from being the biggest creditor nation to being the biggest debtor nation. And again, 0% interest rates, historically speaking, has always preceded inflationary periods. So right now, interest rates are at 0. We seem to be going through a very small deflationary period right here. But again, we're looking to find support here pretty soon. So again, hope you guys enjoy the video. If you guys have any questions, give us a call. Good night.